Hey folks, welcome to 9 to 5 to Freedom. Today is July 1st, 2025, and the market is red in a lot of sectors. Wanted to give an update on my portfolio, how it's doing today, some lessons learned, and action items, what I'm going to be doing in the future. So glad you found this channel. My name is Alex, and this channel I document my journey in building a high yield dividend portfolio that pays me dividends that will eventually allow me to leave my 9 to 5. If you like this kind of content, make sure you sub, like, and leave a comment below if you have questions or what you like or disliked about this video. So let's make it short. Don't have a lot of time. Let's jump right into it, folks. As I said, markets are mixed. S&P 500 is down, not by a lot, but we have this big bill that everybody's talking about. Now, this bill is causing a feud between the president and Elon Musk, and the way how volatile the market is with any type of news around the feud, we can see the Tesla sell off. So today, Tesla is down 4.87%. Now, why does this matter? Well, because if you invest in any kind of dividend ETFs, such as TSLY from YieldMax, this would definitely impact your portfolio today. And 5% is nothing to scoff at. That's a huge dip that we're seeing today. So is this a buy opportunity? On the news, possibly. I don't know. This is not financial advice, but over the past 5 days, Tesla's been down almost 12%. So there's other stuff that's going on in the news about Tesla. Some folks are saying that price target at $475 a share with the robotaxi release and everything that we're seeing. So it's kind of interesting. It's a very volatile one, and that's one of the reasons why people make a lot of money on options with this stock as others. Now let's take a look at PLTY, another one that's been a great performer this year. So year to date, we're up 72%. As you can see, we peaked here. Okay, we started to get a sell-off. $144 was our peak, and now we're seeing this slow release back. So we're seeing a lot of this across a lot of the stocks. Let's take a look at what Nvidia is doing today. Nvidia's down 2%. This is from YieldMax, and Nvidia is down 3%. Okay, so again, another one that we're seeing a slight pullback from Monday. So a lot of these tech stock, a lot of these volatile ones that we've been making some good money on. Coney is down almost 4%. This is on Coinbase. So let's see, Coin stock is down almost 4% as well. Hood stock, let's see, that's down 3%. So we're seeing a slight sell-off, not hoodie, Hui. Okay, Hui stock. Okay, here we go. That's down 3.25%. So now let's get into my portfolio because it is very, very red. But before we do that, I wanted to give a shout out to all the new subscribers, folks. I'm at 183 subscribers. Thank you for finding me. Appreciate you subscribing. Hopefully, I can deliver. Let's take a look at my portfolio, folks. It's very, very red. It's going to make me cry today. Now, yesterday we closed like $4,500 in the green. It was a very nice recovery from Friday. And today, the day's not over, but we've pretty much lost everything that we've made yesterday and plus some. So everything's absolutely red. Look at this. We'll start out from the top here. MSTY down almost $2,500. QDT's down. XDT's down. PLTY's down. Everything's red. Okay, I'm not going to go through one by one, but what I want to talk about. Okay, so my portfolio, right? So I have about well, now it's less because we're $6,000 down, but yesterday was $280,000 worth of ETFs between what I hold on margin, which is $118,000, and what I have in my own money, which is today 154. Yesterday this was 161. So as you can see, that took quite a bit of a hit, but so let's say $274,000, right, as of today. And a lot of these are single stocks. So, and that's the key lesson here, folks. It's a lesson for me. I kind of went a little bit crazy on this because of the juicy dividends. And I guess you know, that's a double-edged sword, right? So when the news are good, when the earnings are good, when a stock is climbing, these single stocks that can make you some great dividends, 130%, all this kind of stuff that they're promising. Now, when we have red days like today, you can see how they can impact your portfolio. Now, take a look here at the two ETFs that I have that make up 65% of my portfolio right here. So this is QDT and XDT. QDT is down 0.84%. Now, QDT is on QQQ, which has more of the tech stocks. It's down less than 1%. XDT is on S&P 500, and this one's only down 0.06%. You see how much exposure I have to the tech stocks, and all these single ones are not helping me at all. So that's a lesson learned, and this is something that I guess I have to think about some more. How much exposure do I want to have? And I feel like right now I'm having a little bit too much exposure, right? So, and these percentages are wrong. I'm sorry. I just realized this. So between XDT and QDT, so I have 55 plus 40, let's say 46. So 101,000 divided by 272,000. So this makes up 37%, right? So 37% are well diversified, where the rest of the stuff is single stocks. So that's the lesson. Now, if I had everything in XDT, and there's great YouTubers like Oracle who he loves XDT position, and I think that's a very safe pick. I like it myself. Mine is down year to date 5.7 because I bought this right before we had the tariff announcements in March, so I kind of bought at a high price. And but the QDT one's been great. I was up like 2% yesterday. This one pays slightly more dividend. So I think either one for me personally, I really like both of them, and I think it's a good blend between risk and reward between the two. But this makes me really reconsider some of my other picks. So I'm gonna watch this today. I'm not gonna take any losses. Let's just refresh if anything is shifted. Ooh, I think it just got worse. But once this stuff starts climbing back, hopefully it will. Um, I think I want to go more conservative from now on. I think this is a great lesson. 4% down, over 4% down in a day is a huge hit. You can't afford that. Fortunately, I'm not getting any margin calls or anything like that. I still have buffer between, what I have on margin and what I have in my account. So that's not a concern today. But any of these stocks really could drop 20% in a day. I mean, look at, for example, HIMS. I mean, it's not a stock that I have dividends on, but just what we've seen in the last month, we had this huge sell off on HIMS. I mean, look at this. June 20th, it was $64 a share, and that closed on a Friday. And then over the weekend, right, pre-market, we had the sell off because there was news about a deal that was broken with I think it was with this company actually, Nova Nordisk. And Monday morning we're opening up $42 a share. So imagine having $50,000 on that and losing 30% of your money over the weekend. So that is the risk versus reward. And I'm just being transparent here. This does not make me feel, very good. Now, let's say I had, all of this money in just XDT. Let's just do some quick math here. So if I had, let's say, the money that I had yesterday, which was $280,000, XDT pays about, I think, 31% or 32% today. So that would be, $89,000 a year. Okay, that's not a lot of money. Okay, but it's very conservative. Right now, this is promising me 196,000 again, but you have dividends that are not recovering, and this is what I'm, seeing. It's like some of them recover, some of them don't. Like Hui recovered, AMD absolutely garbage, Coney was garbage. I had more faith in these two. I thought I was getting in at a lower price, but they have not recovered. I'm basically in the red with these with the dividends that I got. So I think I'm going to give this a few days, maybe a few weeks. We'll see how this jumps back. But really, what I'm going to be looking at is improving my core position as the more blended, more conservative take, and then having a smaller risky position. So thanks for watching, folks. Leave me a comment below, and we'll see you on the next video. Thank you.